Good morning and welcome to the B.F. Anderson Technical Report for March the 7th. I'm mentoring a young man right now. He's a student at LSU about to graduate in engineering. A very smart young man named Dylan Bates. And I ran into Dylan the other day and he said, Mr. Anderson, I've been really trying my hardest. He's trying to build a portfolio. And he said, I'm just not getting anywhere. I said, Dylan, unfortunately, I've been building my portfolio for over 40 years, and it's just a life decision. It's something you're going to do for the rest of your life. There's no get rich quick at this. It's a long-term process. But let's get into the market. We're starting to see a little bit of a correction here. Starting on Monday, the market started to sell off. We sold off. Last week was fantastic. Friday, the market really rallied, but then we started to pull back Monday, Tuesday, and Wednesday, so we'll have to see what happens today. But if you look at the NASDAQ, you can see the moving averages are still in an uptrend. The index itself is above the 25-day. However, volume has been negative volume for 3 days, and Monday was a little bit above average, and the rest of the days have been below average selling, but it's still looking kind of like a correction here. I think this might be a time to be a little cautious. There's some reasons. We'll get into it. As we can also see here on the 35-week moving average, it's still flat, kind of trending down a little bit. It's going to pull up if we stay above 7,500 on the NASDAQ. However, on a weekly basis, things are still constructive. Now, the one worry I've got here is we're starting to see somewhat of a peak here in the direction of the advanced decline line. So this is the New York Stock Exchange number of advances versus decliners. You can see here we broke the uptrend. We're now kind of turning down. Yesterday we had a pretty solid amount of decliners, one of the highest for the year. So advanced decline line is kind of signaling a little bit of a warning. I think the advice right now would be sit on cash, kind of take it easy, no big rush here. Let's let this thing settle out. Now, on the high-low index, you can also see here we got up in basically a stratospheric level. I mean, it really got up here to a reading of 92.5, which again, we're taking the number of new highs divided by the number of new highs new highs plus new lows. And what's happening is we're starting to get some new lows and fewer new highs. So we're seeing a little bit of negative activity there. On the 52-week new lows, we've really had a good year here of less than 40 new lows. Now, we had 28 yesterday, which is one of the highest readings we've had in quite a while. Now, we don't really get too concerned about this until we start seeing 40 a day or more over a period of time. Now, on the small cap index, we're starting to see a little bit of a warning there. This is the S&P 600, which is small cap stocks. You can see they have now broken down below the 25-day moving average. Again, I'm just saying that the market is acting like it might be due for a little bit of a correction. Now, on a long-term basis, everything is fine. We're in a good solid uptrend on the 10-20. The index continues to hover above the 10-month moving average. Long-term, things really look good. We're in a strong uptrend. However, I think this correction could be due primarily because what we've been talking about, we got into greed here, which is, we went from extreme fear to greed in a straight line. Sentiment, as we all know, is a secondary indicator, but it is kind of saying, we may be due for a correction. Will it be 5%? Will it be 10% correction? You don't know. May not even have a correction. Now, on this particular indicator, we did get the death cross with a 100-day cross below the 200-day. The 200-day, the index is continuing to hold above the 200-day. I would say, though, that you can see here that the S&P's got really some resistance here at 2,800. And, we got up to, we broke above 2,800 on Friday last week. And then, boom, it pulled right back. So we really need to bust on through 2,800. Now, statistics are something that we look at. And, there's no guarantee that any of this stuff really means anything, but I think it's interesting to look at history. So we have a new statistic here, and the statistic is when the S&P 500 is positive in both January and February. So you can see here, I started the graph here. Here's January. And then you can see February. Now, this is very rare to have January and February up. There is a saying, so goes January, so goes the year. Now, my personal opinion on this is the reason for this is that earnings revisions tend to get revised for the calendar year in January. So if you get real positive earnings revisions by all the analyst community out there in January, and January's up, it's saying that earnings are looking pretty darn solid. So since 1950, we've had 27 times that January and February were up since 1950. So what the question now is, what's going to happen? What's the statistic for what happens typically the next 10 months of the year? Well, they were higher. The market was higher 25 times of the 27 times for an average gain of 12%. So that's it's very positive. Now, statistic number two, new statistic number two. And we've seen the Dow rally here, the Dow Jones rally, have a win streak of 9 weeks. Now, there has been 15 other occurrences of a 9-week rally since 1900. And a year later, the Dow's median return is 18% a year later. So these are just signposts, and they're basically saying that there's a lot of market strength, which pretty much means maybe we're not going to have a recession anytime soon, which would be awfully nice for the economy. Now, let's get into the top 5. This is Chipotle Mexican Grill. This is a really interesting company. They went through some very difficult times in the past. We've owned this stock years ago. Then they got in trouble with making people sick at their restaurants. And they brought in new management, and they've completely turned this thing around. And you can see here that skyscraper volume. You got this breakout on their earnings report. Stock is in a very strong uptrend. I went there and ate the other day, and I must say the food is really good. And the other story here is that there's a lot of these new diets out there. One of them is the keto diet. Another one is the I can't remember all the name of these diets, but Weight Watchers and so forth. This restaurant really caters to these diets because they offer a high protein, low carbohydrate meal. And the price was pretty reasonable. And the restaurant itself was nice. I totally enjoyed it. Etsy, which is a competitor to Amazon, we're talking e-commerce here, stock broke out on monster volume and made an all-time new high, somewhat of a little pullback here. We've owned Etsy before. It's a difficult stock to own simply because of the volatility, but it's one to keep an eye on. This is Tandem Diabetics, which is another very volatile. See how wide that trading range is. Very difficult stock to own. However, we got the earnings came out. Stock jumped 35% on the earnings announcement. Made an all-time new high, and is now looks like it's kind of consolidating that gain. I'd keep an eye on this one for sure. Now, here's the numbers on that. There are 6 million people worldwide that can use their product, meaning diabetic patients. And they've only got customers right now of 85,000. So you've got a potential market here of 6 million people worldwide, and they're just now going international. And they've only got 85 customers. That's a long runway. Now here's Xilinx, continues to hold up well. This is semiconductors having to do with the 5G technology. Again, their earnings announcement was fantastic. The stock rallied in a strong uptrend above the moving averages. Now here's another stock that we own. We own this company here called Zscaler. This is a fairly new issue. Went public back in about a year ago. You can see here they announced earnings, skyscraper volume, major breakout. This company has to do with cybersecurity, and with the 5G networks out there, the cybersecurity is going to be a very important issue and a very different type of technology than what has been used in the past. So Zscaler looks interesting. You should keep an eye on it. So all in all, what I'm saying is the market's kind of looking like it wants to pull back a little bit. Sentiment got awful kind of frothy here. The high-low index got, a little too high. I think we're probably due for somewhat of a pullback. So what I would do is just sit tight, and I would kind of maybe even raise some cash if you have something in the portfolio that is not acting right. So give me a call if you have any questions. Thank you very much.